All right, what's up, guys? How's it going? Welcome to Trading Night School with Jim of all trades. That's me. That's my the name of my business. So for those of you that don't know me, I'm a contractor as well, and the name of my business is Jim of all trades. I do remodeling and whatnot, so build decks and sheds and any number of things. We're not like Jack of all trades. He's a jackleg. We're Jim of all trades. So anyway, let me find you guys on my channel and so I can see the chat, and we'll be rocking. So this is, there we go. This is Trading Night School, okay? So we're not going to do crypto analysis. I gave a video today about, I gave it to our trading group, as well as I put one out on YouTube. So everything's taken care of. Let me know you got good video and audio, please. I see video. Let me just tell me about the audio, okay? And we'll see what's going on. 4 a.m. in Germany. Wow, you guys are tuning in at 4 a.m. and 3 a.m. I am humbled. I am humbled. You got better things to do. So I'll try to keep you interested, guys. I will try to keep you guys interested. So I'll get the Bitcoin chart on here just to look at it for a minute. There it is. Majorly oversold, guys, just so you know. It's going to have to go, it's going to have to do some correcting here. Yeah, before it can continue down. So let's keep an eye on that sucker. Keep an eye on that sucker. So, all right, let me silent here on my phone. Come on. Come on. Sound. There we go. I think I got it muted. Nice. AV is good. What's up, Aaron? How's it going? Dan? All right, tonight it's going to be a good one. I believe I'm going to help, especially you guys in my trading group, going to really understand my thinking when it comes to entering and exiting trades, and especially on the Forex, but also in Bitcoin, but the Forex in particular. So I want to talk about trade management. I want to talk about my strategy for entering the trade. I want to talk about why I do what I do, and how it helps me in the process. Okay, and talk a little bit about how Forex moves on a regular basis. Okay, so we want to make sure we cover position sizing, what size position you should have. I'm not going to give financial advice. I'm just going to tell you my rules and my thinking behind it. Other people do different things, but I want to share what I do so you guys can know and understand. And so you also understand that when I say I enter into a trade in the Telegram group, when I announce, say I'm long or I'm short, you understand what I've done and what I'm doing. That I'm probably not all in with everything that I could be trading. But I'm scaling it, and we'll talk about that. Okay, so that it's going to be a really good one. It's not the glamorous video that everybody wants to see, but to be honest with you, this is going to be one of the most important ones that you guys have. Okay, so really understand. It's taken me a while to develop this, and I'm still working on the development of my strategy. I'm still honing it, and I've even, after tonight's trade a little bit, I'm going to talk about our Aussie trade and how I kind of flubbed it a little bit, but I'm just patiently waiting right now. I'll talk about how I could have done it better, and then how we can go forward in the future. You always want to be improving, guys. Always want to be improving your strategy. Okay, you just need to always be improving. Just a cursory look here, guys. We've got hidden on the Aussie trade. Those of you who are trading it, we've got hidden. Dang it, I'm having a hard time here. I can't draw a line. There we go. I did it. there it is. We've got hidden bearish divergence here. Okay. The DXY didn't quite make it to the 127 extension. I was expecting it to come on up here. Chances are it's gonna reverse and come on up there and hit it, but we'll see. We'll see if that happens. The DXY is the dollar index, and that's helpful to be charting. as you go. Yeah, man, I see the pips you're gaining, bro. So that's you're up what, 20 pips. Don't get greedy. Don't get greedy, brother. Okay, you guys ready to rock? We got 23 of you. We're going to talk about, I want to talk about entries. I want to talk about position size. I want to talk about managing trades, okay? All right, let's talk about last night's trade first. And I'll tell you, I had several winning trades yesterday. Man, I've had a killer week. Today is the first I haven't lost yet, but it's the first day that I'm not super happy with my trading. So made a mistake today, and we'll talk about it. Okay, so let's talk about yesterday's trade, where my entry was, and then why I took it and held it. Okay. All right. First off, I want to talk about position. Actually, before I talk about my trade yesterday, let me talk about position size. Okay. Number one, let's talk about position size. How big should your position be? Okay. Here's my rule of thumb. Okay. Rules for position size. I'm going to put it right here on the screen for you. Okay. Number one. So rules for position, and this works for the Bitcoin market as well as the Forex market. Okay, number one rule is only trade half. Okay, only half of your account size. That's number one. Okay, only trade half of your account size. So, for example, if you have a $5,000 account size, you should only be margining or putting on margin $2,500 of that amount. Only trade half of that. Okay, the reason why we do that is we hold the other half of it for trade management, especially if we get in a bad trade, or to add to our position if we're in a definite good trade. Okay, and we want to risk a little bit more money, but we're not going to risk it all on one shot. We're going to risk half of our account on a particular trade, and that so that leaves money. So if we go into a negative trade, we're not freaking out thinking we're going to get liquidated or a margin called. We're only trading half. Okay, so if you have a $5,000 account, trade $2,500 of that. That should be your account position size. So what you do is you go to the pip. If you're on forex.com in particular, go to the pip margin calculator, and you just type in pip margin calculator in Google, and you can calculate how much it costs you. I know how much it costs me, but how much it costs you, Aaron, we'll talk about that in a minute. Okay, to risk 1% and to trade half of your account are two different things. So we'll talk about that in just a second. I'll explain the difference of what that means. Okay, but when I say trade half of your account, that doesn't mean you're risking half of your account. Okay. All right. So anyway, so $2,500. Okay. So what we're going to do is we're going to see what $10,000 in the Aussie. If I'm trading AU, the $10,000 is going to cost me $200. So to trade a micro lot, I need $200. Well, shoot, I could trade. If I have a $5,000 account, I could trade 10 micro lots, which is a standard. So right there, my position size, if I have a $5,000 account, should be about a standard, okay, using only half of your account. Actually, you could go a little bit more than that if you wanted to. But basically, half of your account right there is a standard. So your position size would want to be a standard. That means you have the ability to trade with less than a standard if you have to adjust for a bad trade or a bad entry or whatever. Okay. All right. Let's just say you only have $1,000. Okay. Let's just say you got $1,000 account. That means you're only going to trade with $500 of it. Okay. So what can you do with $500? Again, AU costs $200. Okay. So I can do basically probably 2.5 lots. Micros. So, micros. No, mini lot. $10,000. So I could trade basically $25,000 roughly. If I did 20,000, it's going to cost me $400. I've got an extra $100 to trade maybe 5,000 right here. So there it is. So $500 gets you about a quarter of a lot. Okay, so you can use this pip margin calculator to kind of calculate how much your position size is based on your account. So if you've got a $1,000 account, you should only be trading a quarter of a lot. You shouldn't be trading any more than that, okay? Especially if you're trading 50x on the forex.com, okay? Now, depends on what your exchange is and what your leverage is, but 50x is the standard leverage pretty much for USD pairs, EU and AU on forex.com, okay? Now you have different leverages and different returns on different pairs. But I trade basically EU and AU. It's easy to calculate. The what do you call it? The spread is lower on those. So anyway, okay. Now, so first thing you do when you're trading to calculate your position size, you only want to have half of your account. Okay, half of your account size. Then, once you figure half of your account size, you want to calculate, which I just did. Calculate your lot size capabilities. Okay, you want to calculate your lot size capabilities. Okay, once you determine that, okay, once you determine how much you can trade, do not. Here's the rule: just do not trade more. All right, there it is. There's your position size. That's how you calculate your position. Only half of what you can. Okay, we'll talk about managing the trade with the other half here shortly. But for now, we're only going to trade half of it. Okay. Now, secondly, what do you do? How do you enter into the trade carefully if you see a setup? Well, let me talk about the setup that I had yesterday. Okay. Right here, I saw a setup. Okay. I had a wave to the upside. I thought it was a 3-wave move. It was actually it looked more like it's a 5-wave move. Then we had a 3-wave pullback, and that's what I was expecting. So I was expecting a 3-wave pullback, and so my trade idea was that we're going to get 3 waves to the 1-to-1 extension or the 127 extension. Now, so what I did is once price came to the 1-to-1 extension, okay, I actually entered the trade right there at the 1-to-1 extension, right on the nose. Okay. That's the way to do it, Max. Jay, you're gonna have to. Yours is gonna be in pounds, so it's gonna be slightly different. Okay, but you'll have to calculate what you're able to. You'll have to calculate what you're able to trade based upon your position size, which is, in my opinion, should be half of your account. Okay. Yep. All right. Now, anyway, my trade idea says, okay, we're gonna have a 3-wave pullback. We entered at the 1-to-1 extension, and I got a nice engulfing candle on that. But what happened was I did not enter my full position here. I actually divided on this particular trade. I divided up my position into 3 bullets. Okay, 3 bullets. And so I fired my first bullet right here, and the trade came up, and it came up against me, and I went to the negative. I fired my second bullet right here at the 127 extension, right there on a smaller time frame. You see a little bit of a bounce right there, but that's where I fired my second bullet. Then my third bullet, I fired right down here at the 1618. What I did is I took my account size, okay, and let's just say, for sake of conversation, that I'm trading a $5,000 account. Okay, now I'm not going to really share my account sizes and what I'm doing. You don't need to know all that stuff. It doesn't matter, right? But let's just say I'm trading a $5,000 account. That means I'm trading $2,500. I know I want to take $2,500, okay, and divide it by 3. No, not times 3. 2,500 divided by 3. Okay, gives me $833. Okay. Now I know with AU it cost me $200 to get 10,000. So $800 gets me 0.4. Okay. So my lot size is going to be like my entries are going to be 0.4. So I entered a 0.4 right here. Okay, of a lot, which is $40,000. Okay. I entered $40,000 here, and I entered $40,000 here. Okay. Now what that did for me is that brought my average entry for me to break even. When I first entered, my break even was right here, right? Well, once I entered the second position, now I have the average of those two. Now my break even is right here. Actually, let me do this. Let me do. My break even is right in the middle of. So on my first entry, my break even is 40,000. Is right here at this level at my entry. Okay. When I enter down here, my break even now becomes half. Okay, because I have equal sizes. Okay, and it's now going to be right in the middle of those two. And once I enter down here, it's going to bring my break even down this way. Okay, so even though the trade went against me, okay, and the trade did go against me, I still felt confident in my trade until this thing broke the 1618. And even then, and here's what I want to talk about here. Someone may say, well, if this thing goes past the 1618, then you got an impulse to the downside and you should cut the trade. Well, I personally don't cut the trade like that. And the reason I don't is because just because it comes to the 1618, and if I cut it right there, that doesn't mean it's not going to bounce. Okay? So here's the benefit of laddering in your entries. And this is the strategy that I use. I'm just sharing what I do. When I ladder my entries, it brings my break even down. So even if my trade idea is wrong, let's just say that this came down here and kind of invalidated my trade idea, and this was looking like it's going to continue going down, right? At least if it came down here, there's a good chance we're going to bounce back up to this region right here or some other region. We're going to get a bounce back up. And if we do get that bounce, then it's going to come into profit, and I'll have the chance to cut the trade in profit, or see if it's going to continue on, or if it comes back down to break even after it goes into profit, I cut the trade then. But what that lets me do is I don't take a negative loss, okay? I ladder in my entry, so I don't just fire all my bullets at one spot. So, okay, let's hope for the best right here. I actually enter in a third of my position, or sometimes a fifth of my position, depending on how confident I am in my trade setup. A fifth of my position. And so that brings my average entry down, and that lets the break even come closer. Okay, and what that also did was give me more confidence that my stop wasn't going to be too killer. So that's really, really important, to bring your average cost as close to the bottom as you can. Guys, there's lots of fake outs in the Forex, okay? This engulfing candle right here was a fake out because it came all the way back down. And what that did is a lot of people got in on this candle, and when it came back volatilely, a lot of people stopped that trade out, and the market makers took that liquidity. I'm not going to let them have my liquidity, okay? Because I'm not going to dump all my liquidity on one place on the chart. I want to be smart. I want to say, okay, we're going to put a little bit here and see what happens. And so we put a little bit there. The trade busted, but that doesn't mean the entire trade. The trade at the 1-to-1 extension got busted, because a lot of times it will reverse at the 1-to-1. It'll engulfing candle and then retest and then continue, but it didn't do that here. So it came down to the 127. I'm like, okay, 127. That's still a good trade entry. So I put another entry there. It went past it, but it didn't go past the 1618, which gave me a lot of confidence to go ahead and enter a third position down here and let this thing ride up. Okay, and once I got this engulfing candle right there, it was on like Donkey Kong. I bring my stop to break even, and I am in the money. Okay, this trade for me the other night, I traded it from here up to here, was $1,000 trade for me, and it was a great trade. And I'm glad to have had it, and it, that's what it was. Okay, but that's how I traded that particular entry. Now let me talk about what I did. I actually traded this to the upside the next day during the news event right here. I traded that to the upside, and here's how I did it. Okay, now first off, I saw the break right here, this broke the top of the trend line right here. I was like, oh, there's a break there. So what I did is I actually entered my first bullet right here at this spot. I don't usually do that, but I only fired a little bullet. Well, I got a bounce off of that and a retest. Okay, but then it came back down. Okay, and it came back down kind of quickly. So I fired my second bullet right down here on that reversal candle. When it came down a third time, okay, I fired my third bullet. Okay, what I did is I averaged my entries in. So in other words, I had confidence based on I had other reasons why I believed the price was going up. Okay, so but I was confident in my trade, but I wanted to get my entry and I didn't want to miss it. And so what I did is I laddered in. And what that did, instead of my entry being right here and I had to wait through all this stuff, my entry actually averaged in right in here. And so once this thing broke out on that candle, I was in the money. On the news event, it came up. I took my profit. I took my profit at about $600 right in there and waited for it to come down. Okay, and that's how I traded that yesterday. And so between here and here, I made like $1,600 on that, and that was a fantastic day for me. I really enjoyed that day. So anyway, that is a way that's going to help you guys. If you start breaking your trades up into small bullets rather than firing at one shot at one place on the chart, guys, then it's going to help you do two things. Number one, it's going to give you a better position, and number two, if the trade goes against you, it is a better chance that it'll rebound back to your entry, where you can get out break even or even with a little bit of profit if the trade goes against you. All right, any questions about that so far? I've got more to say, but anyway, I'll take some questions if you've got it. How are we doing? Anybody there? This all assumes that I'm comfortable with my trade setup, Dan. That's exactly right. When I enter a trade here, um, when I enter a trade, I have a setup and I'm looking for something in particular. And as that trade progresses, I get more or less confident in that trade setup. Like today's trade setup, busted. Okay, I mean it's not completely busted, but it's not so great. I was trading today the possibility that this was a three-wave correction. Now it still may be. Okay, it hasn't completely busted. Let me show you. That's why I'm still in the trade. Okay. This has come to the 1618, but it hasn't gone substantially past it, and we've come back. Now, if we get follow through to the upside, then I'm gonna continue holding. If we get another down push or threatening of the down push, I'm probably gonna go cut that trade. Okay, but that being said, this has a very good possibility that this is actually just a three-wave correction. Okay, watching the DXY, we're coming to the 1-to-1 or the 127 extension, which is a three-wave. It's a three-wave move. Now it could go up higher, but right now it's looking three-wave-ish, and there's a little bit of a rejection off of it. It's not as volatile as I would like to see, so I'm holding it tentatively. Okay. But yeah, you need to be confident in your trade setup for sure. Okay? 1 to 2. 1 to 2 is my minimum risk reward. Depending on how confident I am with the setup. Certainly, you can try a crossover. I don't like. I'm not a big fan of the moving average crossover. Uh, I like the price moving across the moving averages, but I'm not a big fan of the crossover, the moving averages. I just find myself not using it too much because especially you get a lot of false crosses, and it's hard to wade through those false crosses. So you have to know when to use it, when not to use it. So anyway, but yes, the 1618, man, is a good place to bounce, Raul. It's a good place to bounce. But you can, now it depends on what you're talking about, Jay, Crypto Fever. If you're talking about my moving average, when I have the moving average on the RSI, that's a different trade altogether than my moving average crossover strategy. If you're talking about my RSI moving average strategy, that's a different trade setup, and I have a lot of confidence in that for sure. Okay. Does it always bounce? Yeah, it bounces there quite a bit, quite a bit. Now, let me talk about, guys, a trade that you guys can do, a setup and a trade that y'all can do on a regular basis when you're looking for reversal, okay? So I was actually looking for this three-way to finish, and I was looking for reversal tonight, and it didn't come. It hasn't come yet. This is a potential reversal, but we'll have to wait and see. I'm not so sure. Well, we'll see. If we get the follow-through, I'll be happy. So we'll see. But let me show you how you can trade this if you're looking for a reversal anytime soon. Okay. What you can do is you can use the engulfing candle strategy on the 5-minute or the 15-minute chart. Okay. And let me show you. And here's how you can do it. Let's just say the price comes down here, and you got this engulfing candle right here, okay? And then you got the retest. And so you actually, there's a trade setup that you actually enter. The engulfing candle with the retest, which is, by the way, it's one of my favorite entries, okay? I use the engulfing retest quite a bit. I use it on all the time. I use it during my trade management as well. So you get an engulfer and then a retest, and you enter the trade long. Now this one came against you, okay? But you entered right here. But let's just say you didn't enter fully. You entered just 1/3 or 1/5 of what you could have entered. So you fired your first bullet here. It came against you. Now one way to handle that is that you can cut the trade once it goes against you. Okay, you can cut the trade. And you can stop it out and call it good. That's one way to do it. Or, I mean, here's another way. You can let it come down and wait for the next engulfer. Here's the next engulfer. This one, right? This candle right here was an engulfer. Okay? It retested. It retested right here. You could have entered right here your second bullet. Now what that does is that brings your average entry down now halfway between those two. Okay? From there to there. So you brought your average entry down. So now, even though price came against you, it came back up into profit. It gives you all kinds of opportunity to get out of the trade if you want to. Okay? You have all kinds of opportunity there. Now, let's just say you waited for the next engulfer. Okay? Well, the next engulfer on the 15-minute is right here. Okay? And you put your final entry here. Now, that's a long way to wait, and that's a long way to let that go. I wouldn't recommend it, but let's just say you did. Okay, that brings your average entry down to here now, about where that yellow line is. And so even though this came against you, once this reverses and comes back up, guys, it doesn't have to come up all that far, okay? And you've managed a bad trade. This is a bad trade, right? You're going the wrong direction. And sometimes we do that, and we get stubborn in the way we handle it. So one of the things that this does for you is that protects you, or at least helps you with your stubbornness. If that you're too stubborn and you won't let go of a trade, then do this instead. It's better, as Aaron has been saying in our group, to learn to deal with a loss and just cut the trade. Now, I personally do the laddering in because I don't like to take a loss. That doesn't mean I don't take losses. It just means that I don't take losses often. But sometimes when I do take them, they can be substantial. And so I'm still working on getting those out of my trading in particular. So there's liability to something that I'm sharing with you. There's pluses and minuses. But the substantial losses, they only come when my psychology isn't squared away and isn't right. Okay? All right. Now, so what this allows you to do is it allows you to bring your entry closer to a retrace so that you can get out break even. And then and that's the key. Now, what's going to happen psychologically for you is that once price comes back to you, to your entry, and we need to talk about this too. Once price comes back to your entry, what it's going to do, what you're going to do is like, oh, it's going to go in profit now. No, it's not. Most likely, once price comes back to you, the first time it comes to you, it will only touch your entry and get you at break even. Then it'll generally retrace on you before it continues going back. Okay? That happens so often. Okay? So often. Look here. Look here. We had an engulfer and then we had a retest. If you entered right here on the chart, price came against you and then came back to you and then took off. Okay? So a lot of times you'll get one chance. If price goes against you, you'll get one chance. Price will come back to you. Okay? If it does, you need to have some discipline and a general rule that you cut that trade when it comes back to break even. Trust me, you'll get another shot at it. Why? Because the price will come back down a little bit and then it might continue up. What you can do is enter your trade lower, and that gives you a better entry, and it gives you a lower perspective. And you're not going to enter the whole thing. You're going to enter the first bullet right there. Once you break that thing, once you cut this trade break even, now you have no risk involved, and all you got to do is now trade smart from this point on. So anyway, you need to realize that a lot of times once price goes against you and comes back, you get one shot at getting out of there before it continues on. So take that shot. Don't think it's going to go for you. You'll get a better position if you get out of the trade. I've been working on that aspect of my trading. That once price comes back, I cut it no matter how I feel about it, and then I wait for it to retrace, and then I look for a better position. Position is key, guys. Position is key for your psychology. Okay, I can't tell you that enough. Position is key. Okay? All right. So if you're laddering in, that allows you to get better position against the market makers, because if you put it all in at one spot, then you got really bad position. You only got one shot. But if you do a third here, a third here, and a third here, that gives you an average position right here. It doesn't take price doesn't have to come up too much more in order to come back to break even. Now, right, this one has continued down. So, yeah, I'm not saying that this is the way you should have traded that. I'm just simply saying that this will help you manage a trade. Okay. So we're talking about laddering in, breaking your trade up into multiple entries. Now, what if, like this morning, like last night? Let me show you what I did. I've put the fibs on this and this, and I played the 1-to-1 extension bounce. Okay, as soon as this thing hit the 1-to-1 extension, I entered my trade right here. Now, I only entered a third of my position, guys, and the trade immediately took off for me. It took off, and I didn't get a chance to enter that trade again. I didn't get a chance to add more to my position. Okay, so what about that? You say, well, you didn't make as much as you could have if you put it all there. That's exactly right. But how many times do you nail the bottom? Like, nail it. How many times do you nail the bottom, really? Now, I happened to nail the bottom on this one, and I actually took a profit. Let's see. I got 20 pips out of it. Once I saw the rejection here off that candle, I took my profit at like 20 pips. and I was very happy with that. Okay, I was very happy with that trade. Okay, so don't worry that you've missed out if you're only putting in a small portion. Take the profit. Your profit will increase your account. Okay, just get consistent profit. Don't worry how big or how small it is. Just get consistent profit, and before you know, you're going to see your account just growing. You're like, whoa, you got money there that you didn't realize you had, and your account's going to grow. Just get consistent profit. Okay. All right, Dan's got a question. He says, to do this laddering, you just take the market buy order for say 25,000, and then you do another market for 25, and again later on. That's exactly right. So that's if you're trading. So you broke it up into 325,000. So that's assuming that your lot size is going to be three quarters of a lot, or $75,000. That's exactly right. Now, say your lot size, the final position that you can have is 25,000. You break that up into three. Okay, so that's going to be what, 8,000 roughly. So you're going to do $8,000 instead of So whatever your total position size at the end of the day, whatever the half of your account is, whatever lot size you can buy with half of your account, divide that by 3 or 4. Okay. Try even 4, okay, or 5, because how often do you enter a trade and then the trade goes against you and you're like, oh crap. Well, if you've only entered this small tiny amount, the negative balance isn't that big of a deal because it's just such a small amount. You're like, okay, I'm going to wait for this to be a better setup, okay? And so, or you can cut the trade without feeling bad about it, right? So yeah. What this does for you is it lets you get a better position and it gives you better psychology. And how many times, guys, does basically you had the right direction, but the trade goes against you, it hits your stop loss, and then it goes the way you were trading it? How many times does that happen? This allows you to play that market game with the market makers, okay? It allows you to sustain that little stop hunt that they're doing when they go down another hit and another hit and another hit, to finally sustain yourself through that so that you can wait to actually make the profit, okay? Now, I'm actually underwater in my current trade in AU right now. I'm actually underwater. My yellow line is my entry. I'm about 25 pips underwater right now, okay? But I see a good sign of reversal here. And so I want to wait and see what this is going to do. I want to wait and see what the market's doing. Okay, looks like we've got hidden bullish divergence working on the small time frame. That's the other thing that I do. I watch the 1 minute and the 2 minute charts to watch the moves for hidden divergence. Okay, there's hidden bearish divergence right here, but we've come down, and now it's formulating some hidden bullish divergence where I can expect another little hit, another little move to the high, and so I want to see this come up. Now this may come up here and just close to my entry, right here at the top of this or the top of this. Okay, and I'm probably going to cut my trade at that point and then let it come back and retest, because most likely the market generally does this. Okay, and then it goes, right? And so I'll let it. I don't want to have to wait through negative balance again. So if price comes back close to my target, I'm going to cut it for minimal loss, let that thing retest or come down 3 waves, and then I'll take it to the upside again if divergence is telling the story and whatnot. So anyway, that's where I am in my trade right now. And I can't tell you how many times I've had to wait through a little bit of a draw, what we call a drawdown or a negative, because we don't know where the bottoms are, guys. We try to nail them, we try to find them, but at the end of the day, you don't know where the bottom is. And so trading reversals is challenging. That's why it's better to wait for the engulfing candles. The engulfing candles really, really tell the story of reversals. So better to wait for the engulfing candles. Okay, so I've covered position size, only play with half of your account. I've covered laddering in, okay? Now, stopping a trade. Let's talk about stopping a trade. Before that, does anybody have any other questions about what we've covered before I go on to stopping a trade and how I go about setting my stops and dealing with stops? Oh, excuse me. Ugh. Guys, I've been laying about 1,400 square feet of flooring, and I'm pretty tired. My back's tired. My knees are tired. I'm pretty exhausted. You know one thing good about trading the Forex, guys? Tomorrow the market closes at 4:30, and you can enjoy your weekend. You don't have to sit and look at a chart, worry about trades. The market's closed. Go enjoy your life. Go enjoy your family. Go enjoy doing something, and don't worry about trading. It's awesome. You don't have to sit looking at a boring chart on Saturday when it's just pumping and dumping and doing a lot of manipulation and crap moves like Bitcoin does on Saturday. How many Saturdays have I lost watching Bitcoin? Oh, man. That's one of the benefits of Forex. All right, let's talk about stops. I'm ready to go on here. Okay. Terra, it comes with time and practice. Time and practice. You got to count with the fibs, so make sure you're measuring your waves with fibs. Let's count this wave here, guys, for Terra. Measure the first wave. Second wave came up to the 2618, got a pullback. Looks like a kind of a triangular pattern. It's probably like a fourth wave. 1, 2, 3, 4. Probably going to get a hit to the 5. Three-wave pullback, maybe more. Maybe. That's a possibility. Oh, just did it right before you asked me. You can't stop yawning. Okay, let's talk about stops. Now, if like I want to go to bed and I don't want to sit and watch a trade, because I'm usually, guys, only trading for 15, 20, or 30 pips. If I get 15, 20, or 30 pips, guys, I'm happy. Okay, I'm happy. I'm usually trading a lot to 2 lots, guys, and so 20 pips is on 1 lot is $200. On 2 lots, it's $400. I'll take a $400 trade all day long. Shoot, 2 or 3 $400 trades, 15, 20, 30 pips. I mean, that's $1,000 in a couple of trades. I'll take that all day long. Okay, I'm not greedy. I have been greedy, and that's why I lost. I'm not going to be greedy anymore. I'm working on that part of my trading. So anyway, but if I want to go to bed or something, or I've got to go do something, and I want to make sure price doesn't go against me. For instance, if I'm in this trade, and I'm in this trade right now, I want to know when price goes against me. So what I'm going to do is I'm going to right-click on my chart and add an alert right here. I'm going to make sure it notifies on the app. I'm going to make sure on my laptop it shows a pop-up. I'm going to make sure it plays a sound, beep, beep, and I want to make sure that sound rings for 30 seconds or more. Okay? I'm going to go ahead and create that sucker. Now that's my default. I don't have to really set those things anymore once my default's set. So basically, if price comes against my and hits my line here, that's going to trigger me to say, hey, price is moving. You need to make a decision on what you want to do with your money. Okay. Now I also do that with a take profit. I say, okay, once price comes up here right close to my entry, I want there to be an alert there. So I want to make sure that I have an alert up here close to my entry. So when price gets there, I'm alerted, and I can decide, is this thing going to go on or is this going to pull back? And I can cut my trade so I don't lose anything. So that's another benefit there. So I set alerts. I don't personally set stops on the exchange. And the reason why I don't do that is because I don't want to tell my broker where free money is. You put your stops in the exchange. You got evil brokers. They know where your stops are. They know where the liquidity is. They will come and get it. They will come and get your stop and then go on the way you were trading. And unfortunately, we live in an evil world with evil where evil people do evil things, and so even though this market's regulated, stuff like that happens, and so you need to make sure that you do whatever you can to stay away from that stop hunt. Okay, you want to stay away from that stop hunt because a lot of times they'll just come and hit, and then they take price the way you were trading it, and they do it all the time. Somebody else got any questions here? There you go. Good. Read. Max says you can set different sounds for different things. So I might have one sound for profit and one sound for loss. Good point. Hey, thanks for that, Brian. I appreciate it. Thank you so much. Um, Guys, listen. I'll just be honest with you. I've lost thousands of dollars trading, and I realized that this thing was bad, and I didn't give up because the moment you give up, guys, the moment you give up, you lose all the money you lost. I was like, I'm gonna get this, I'm gonna learn this, and I'm gonna make my money back, honestly. And so I just started studying and learning and practicing and trying to really focus and hone my strategy. Um, and I'm finally at the place where I'm becoming more and more profitable. That's just happened, guys, within the last year. Okay, that's just where I am in my trading journey. Okay, it takes years to learn how to trade, but I'm hopefully cutting your learning time in half. Okay, you still have to. The big learning is managing your psychology, learning to deal with your psychology. That's where the big training comes. I can't do that for you. I can only tell you. I can only tell you stories, and I can give you anecdotes and tell you what's good for you. But your psychology is the ultimate reason why you're losing trades. That's the main reason. And so ultimately, you have to trade and trade well enough and disciplined enough to learn how to overcome that psychology. And so I'm just trying to equip you with at least some tools along the way because, man, I don't want what happened to you to happen. I don't want what happened to me to happen to you, and chances are it has. And the trading group that I have, that just kind of happened, to be honest with you. I had a couple of people randomly just give to my Patreon and become Patreon supporters just for the YouTube content. And I was just so humbled by that and just thankful. So I was like, I got to do something special for them. Even though they were just thankful for the YouTube content, they were just giving me $20 a month. My first subscriber was $22 a month. And then another guy was $40 a month. And, I was just super thankful. And they just gave out of, because they liked the content on the channel. That's when I only had like 500 subscribers or something. And I was like, I'm going to do something nice for them. And so I created the Telegram group to just talk to them and share my trade ideas that I was working on and things like that. And then basically I added some friends to the group and we became like 10 of us or something like that. And then all of a sudden I just started kind of sharing, hey, we got this group here, and as a thank you for supporting me for any gift on Patreon. And so basically it's kind of grown to what it is now. We've got 150 people in there right now, and we're all trading and learning. But hopefully the group is facilitating, the money that you share with me in the process for the effort that I give you. Hopefully it's worth it. Hopefully it's helping you. You're hoping it's at least stopping you from losing what you might be losing if you were on your own. So anyway, well, thank you guys. Thanks, Dan, for seconding that. Yep, that's exactly right, Tom. That's exactly right. That's why I don't use exchange stop losses. I use uh, yeah, big dog. You're right. Yeah, ND, take notes, man. Take notes. So okay, so I handled stops then. Oh, let me talk about my stop a little bit. I don't. So here's the deal. Like right here. Let me show you something. Remember when I say to you always um, the market always comes back. It always does. It really does. Okay. Um, so let's just say my stop was like, okay, my trade's invalidated if it crosses this line right here, this bottom. Let's just say that that's what I told myself, that if price breaks this, trade's over. Okay. Now let's just say my entry was somewhere like right in here. Okay. Now, if price comes and goes against me and breaks that, I don't stop it all of a sudden. What I do is I wait for it to come back. As I wait for the retest, there's generally always a pullback before continuation. Okay, so even though price, guys, I mean, over and over and over this happens. Okay, look here, price broke a key level, and then what does it do? It comes back and tests that key level and then continues. It broke a key level. What did it do? It came back and tested it. But then it went on. So listen, guys, that's what you get in the market all the time. All the time. Let me just show you. Okay? Right here. We'll just go down this wave. Right here. Price came down, broke a key level. Broke it right here. It came down. But what did it do? It came back up. It came back up. And then it went down. Okay? Okay, so price, here's the next key level. Price came down and broke it right here. But what did it do? It came back up and then went down. Broke the key level. I mean, it's just over and over and over. Key level right there. It broke it, but what did it do? It came back up to it. Then it went down. Now look here. Here's the next key level right here. Okay? It broke it, but what did it do? It came back to it. That's the way the market moves, guys. It will break the level and then come back to it. Break the level, come back to it. Break the level until eventually you get a reversal. Okay? Until eventually you get a reversal. So, I'm looking at this, by the way, as 3 waves to the downside, guys. And here's the way I'm looking at this. I got 3 waves right there. Okay? And we don't have hidden bullish divergence, right? Actually, we do. From the bottom of this wave right here, we got hidden bullish. So I'm expecting that. So I watch the waves as they're being made, watch them on the 1 and 2 minute time frame, and I look for divergences. Okay. Now, if price comes down here and wipes that out, it could, but more than likely, I'm expecting price to continue on. So I might even put the fibs on here. Came to the 1-to-1 extension right here. So we'll see if it comes down to the 1276. It might come back down to the top of this wave, but chances are it's going to continue on. So I'm going to hold this thing and even wait through this stuff. Okay. But the market always comes back. It always does. Okay. Let's look at the higher time frames. Let's look. All right, look now. Look. Here was a key level. Price came down and broke it. Came down, but what did it do? It came back to it. Okay, it came back. Okay, let's talk about how it went down. Price came up, came down, established a high, came back down. Okay, it broke that key level, established a new high, came down, came and broke that high, came back down to that level. Okay, broke the high, came back down. Okay, and then continued. Okay, now here's the high right here, right there. Price broke it, but look what it did. It came back down. Didn't quite make it. That one didn't. That one's a little bit bullish. It didn't quite make it all the way down. Okay. Here's the next high right here. Right there. Price came down. It broke it. But then what did it do? It came back to that area. Okay? Let's keep going. This is how price moves, guys. Here's the new high right here. Okay? The new high is right here. Price came up, broke it, came back, retested it before it went on. Price, here's the new high right here. Price broke it, retested it before it went on. Now it's gone up significantly. So we have a big gap between the last little high. So what's price doing? It's coming back. It's coming back to this. Okay? Now, let's look. Let's look at this wave here. Now, price is going down. It's got to establish a peak, right? So there's the last low. Okay? Price broke that low. What did we expect it to do? It's going to come back to it. It's going to come back to it. This is most likely going to be a good trade. Okay? It's going to come back to it before it goes down more. It's going to come back to it before it goes down more. Now, whether it comes down here before it comes back, but it's going to come back. It's going to come back to the level. It will. It might only come down to this level right here. We'll have to wait and see. But that's the way price moves, guys. Price moves. It'll break a level and come back to it. Break a level, come back to it. So I don't stop the trade when it breaks the level. I stop the trade when it comes back and shows hidden divergence to the, to whatever direction it was going. Continuation divergence. Okay. So anyway, let's see. Yeah, Tara, TD sequential is for some people, it's just not for me. Okay. I'm trying to remember. Guys, all that. What did I say I was going to cover in this? My position size, entry mechanics, stops, and trade management. Yeah, I've kind of covered all that stuff, guys. Just want to make sure I covered everything I said I was going to. All right. That's Trading Night School for tonight, guys. That is Trading Night School. Not doing TA tonight. It's just, this is to learn how to trade, not to give you free TA or whatever. So anyway, Bitcoin, I'm expecting it to come back. Okay, guys, price broke a key level. Okay, it broke this trend line. What would we expect it to do? Just apply it. It's going to come back to it before it goes down, most likely. So expect that. I would expect that. See if AU. Yeah, we still got hidden divergence yet. So still waiting on it. Still waiting on it. Awesome, James. I'm glad to hear that, buddy. Glad to hear it, man. Thanks for sharing that. Last chance for questions about strategy. Not questions about a particular chart, but strategy. And my strategy as I shared it with you. Yep, Dan, you got to paper trade to where you feel the stress. You've got to feel the stress. If you don't feel the stress, it's not going to help you learn. All right, I hope that was helpful to you guys. hey, thanks for stopping by, and the 30 of you there. Hey, I hope you learned something. I hope this is helpful to you. I hope this is helping you trade. And thanks for the kind words, everybody. Really, really appreciate it. We'll catch you on the upside. See you guys in the Telegram group. If you're not part of the Telegram group, you can still join. Still kind of early in the month. You'll get plenty of value for your first month. So anyway, yeah, come on in. We'll have lots of fun. All right. How far back do you go when predicting the next move? I generally look at the previous move, Tara, on the 4-hour chart. I mean, I analyze on the 4-hour chart where we are. We've got more upside to go. This is going to go up more, in my opinion. You can see we've got clear on the 4-hour chart. We've got clear hidden bullish divergence here on the 4-hour. So a long position in AU is a really good position right now. That's why I'm thinking we're going up soon, because we got hidden bullish divergence right here. So it's coming soon, guys. It may not be this week. It may be next week. That's next week's move. But anyway, a long position's coming for sure. We still could have more downside before that. I just don't know. I can't tell you where the market makers are taking. I generally believe they're probably going to bring price back down to here. See the structure zone right here? They're going to bring price down here, most likely. But they're not going to bring it straight down, guys. It's gonna come up and down maybe. I don't know. It could go straight down. Could go. But down looks like the direction for now. We also do have a trend line here. Let me look at that here. Just showing you an example. We do all our TA on the 4-hour chart. We are hitting that trend line right here. You see that trend line right there? We have hit it. That's one of the reasons we're stalling right here as well. We got the hidden bullish divergence on the 4-hour plus that trend line. Let's go to the 2-hour. See what we got here. We got hidden bullish there, but we don't have standard bullish yet. So I like to see the standard divergence on the 1-hour. Don't quite have the standard divergence yet. So we might get some more lower lows before we go on up. I'm not sure. I'm not sure. I'd like to see it come back to my entry a little bit or a little bit higher so I can get out and then trade it to the downside, maybe scalping that last part of it. If we get it, we may not. It may be reversing. Andy, thank you, sir. Appreciate it, man. Thank you very much. Very kind gesture. Very kind gesture. Very, very. Anything I can do for you, Andy, let me know. Any chart you want to see, since you shared out of love there, I'll be glad to do a little extra for you as well. Anyone? Anyone? All right, there you go. Have a good night. See you guys in the Telegram group. Behave yourselves. Bye-bye.